Before we get started, I want to just make a very quick announcement. Coming into 2024, we've had a lot of general partners ask us, hey, do you have some type of information or program to help limited partners understand the venture capital asset class better? And at the time, we had some articles here and there that were okay, and we put a lot of thought and reflection. We decided to launch something called the LP Institute. The LP Institute is an 8-week training program for new and experienced limited partners to get better at mastering the craft of investing in venture capital firms. Because investing in startups is a very unique thing, and investing in venture capital firms is also very unique. There's some nuances, legal issues, et cetera, that need to be understood. And we're going to cover everything and help participants at the end of the 8 weeks, if they're interested, to actually invest in a fund or fund of funds, possibly even one of the people here, never know. So we're going to be helping these limited partners from around the world. And we've had these requests come in from Latin America, Asia, literally everywhere. So we're really excited for this new program. If you go to govclab.com, you'll see a whole thing about the LP Institute there. Niels, if you don't mind putting a link into the chat. But I don't want to delay any further from our amazing guests. I'll give one Robert's Rules of Order. At the bottom of the screen, there's a Q&A button. If you have a question for the panelists, please put it in the Q&A. If you want to introduce yourself, put that into the chat. We will not be monitoring the chat for questions. We'll just be monitoring the Q&A area for questions. If you introduce yourself and let's say you're a general partner, please don't share any information about your fund. That could be construed as general solicitation, and we try and avoid that here. So without further ado, I'm really, really excited to have 4 amazing LPs here to talk a little bit about their background and what's happening in the world today in investing in GPs. So who wants to go first and do a brief introduction of themselves? Uh-oh. Mark,
Ladies first.
Okay.
You said it, I said it, so hi, Marko.
Is it my turn?
Yeah.
All right, yes. Marko Hara, I'm investment lead at Decile Capital. I started in 1986, 38 years ago, investments, founded and co-founded a couple of companies, got a couple of exits in the 90s, late 90s, went into family office business, then started as a GP sometime before the dot-com crisis. Was invited to run a pension funds, private equity and venture capital business around 2006, 2007. I spent 15 years there as an LP. So that's what I've been up to.
So you bring a lot of the institutional side. Maybe Pola, do you want to go next?
Sure. Hi, everybody. My name is Pola. I help manage Kensington Capital's venture funds. My background started off in public accounting. I was at KPMG for a few years across audit, tax, tech consulting. And at one point in my career, I decided to move to East Africa to work for an early stage company there. And to my surprise, they were raising money. So this was my introduction into tech and venture capital. Once we were successful in raising money, I said, I'm curious to be on the other side of the table. I want to be on the GP side. And long story short, transition to the LP side. So happy to meet you all.
Who wants to go next? Maybe Youngrok?
Sure. Hello, everyone. It's a pleasure to meet you here. My name is Youngrok. I run a GREE LP fund, which is venture capital fund of funds. So basically what we do is we source and find top venture capital funds and make investment. my background, my venture capital background started at Arch Venture Partners back in 2016 in Chicago. And then I had a chance to start investing in the fund alongside a startup in my next career, which was Recruit Search Partners, Japanese corporate venture capital, where I fell in love in investing venture capital funds, and here I am now.
Awesome. And last but not least, David.
Hello, everyone. I'm David. I am the head of investor relations here at Alchemist Accelerator. And I found my merry way into the world of venture capital after being an operator for a while. And after we went through a nice exit, ended up starting the angel invest off that capital. Made a couple of mistakes there, early bets, didn't really know what I was doing. And over time learned as I joined Skydeck, which is a startup accelerator in Berkeley. And then eventually found my way to On Deck Angels, where we kind of like oversaw a lot of operator angels become fund managers and have been happy partners with the VC lab for a while. And now, I'm in the world of Alchemist, but also an individual LP, write checks to a lot of emerging fund ones and fund twos.
Awesome. So I just because we announced the LP Institute at the opening of the call, I'd love to just get your views on some of the areas, having been an LP, making investments that you think LPs could improve on in general, areas where maybe they could better diligence or anything that you think the LP community could benefit from. I'd love to hear. Who wants to go first?
I can kick us off. There's three main things that come to my mind. The first is cultivating relationships. That's building strong relationships with GPs and fellow LPs to foster a collaborative ecosystem and enable better knowledge sharing and alignment. The second one I would say is really being there to support emerging fund managers, providing support, access to capital, and just fostering diversity and contributing to, a more dynamic venture ecosystem. I also think it's important for LPs to prioritize various ESG factors and consider those in their due diligence process as they look at various GPs and what their investment practices are.
That's a great list right there. Honestly, I couldn't agree more. So I'm taking, if you see me typing, I'm taking notes. Does anyone else want to add something?
I think to follow on what Paula mentioned, and I know Youngrok was about to speak, so probably Youngrok can.
No. Go ahead, David. Sorry.
Okay.
Go ahead.
But I think it's most important to find out like why you're LPing. I assume the kind of LP audience out there, a lot of them are emerging LP by design. And so they're probably writing their first couple of checks of LP and finding the main motivation for that, whether it's deal flow, whether it's access, whether it's a financial return. I think it's really important because that is going to lead a lot of decisions that you'll eventually make as an LP. For example, if your main goal is deal flow and access, then you're probably looking at diversified portfolios. You're probably looking at more shots on goal kind of thing, right? But if you're looking for financial return, we typically see a lot more concentrated portfolios, 15, 25 kind of size of portfolios outperform in terms of 5x and north of that. So it really does depend, but I think motivations are most important, and be honest with yourself.
Yeah, I was about to say exactly the same things, understanding the goal of the LP investment actually. So having the goal to source the deal, investing the venture capital funds becomes more and more common in this environment, right? A lot of people writing a check to the venture capital funds as a part of their sourcing channel. But some funds like us, we are less interested in their sourcing through the fund investment, but more we want to increase our upside from the investment, fund investment. So understanding what we is a very important factor. Yeah.
I would like to say that the most important thing for me is to decide if this is something that you really want to do. You have to make up your mind.
It's a long game, right?
Yeah, the venture capital investing as an LP is a very long-term project, It takes up to 15 years to know if you're any good at it. 15 years, because the fund investments are like 10 to 15 years. and there shall be cross-cycle investments, you know. One of the advice is that if you're new to these asset classes, don't try to figure this out on your own. Please seek advice and mentors if you can find. Avoid these mistakes, because everybody makes these mistakes if they don't get any help or advice. You know, try to create a network, meet people, like-minded people, old to this asset class, and those who have been doing this for some time.
Wow,
That's what I've learned.
That was great. Sorry, what were you about? Were you about to make a final point?
No, that was my point.
I literally took copious notes on the first question. Well, admittedly, I asked the question, it was somewhat self-serving, but all right, so let's go. I want to go back a little bit and know more about your journey. And then I'm going to ask you questions about the overall industry. And so, you know, Marko, you did a pretty good job of outlining how most of you talked a little bit about how you got into becoming an LP. But if you want to add any more details about like what really got you interested in being an LP and maybe why you're still interested in being an LP now, I'd love to hear that. Maybe Pola, I didn't quite get too much background. I know you were at KPMG and then you went into it afterwards, the East Africa story. But what motivates you to be an LP and why did you decide to do it?
Yeah, so I'd say Kensington's unique in the sense that we're an LP, but we're also a GP that does direct investments. But what I like about the LP side is being able to support and facilitate the tech ecosystem on a broader scale across various fund managers, and therefore get exposure to a larger portfolio, and also see the way in which funds manage their firms and execute their strategies, because it varies quite a bit. I think it's really unique in the sense that, you know, being able to work with these fund managers, partnering with them, sourcing deals and co-investments, not only from funds that are in our portfolio, but ones that are in our network that we are getting to know. And just this process or this approach generally really aligns with my interest in creating a more meaningful impact across a spectrum of funds.
Youngrok or David, you want to add anything?
Youngrok, you want to go first?
Sure. So I have a feeling that the answer could be very similar what David is going to give as well. But so when there's a previous firm, Chrostek Partners, we invested in, you know, well-known VCs, but we started investing emerging majors. And I saw how quickly some of those emerging majors became so successful in terms of both brand and actual return perspective. And I thought like, oh wow, it's like, you know, our main thing was investing in startup, but as part of these side projects, we found that the emerging major fund investment could be really, really interesting, and we dig further and realized venture capital fund investment could be also a very interesting investment practice as well. In fact, we all know it's a power low game, right? When it comes to venture capital. So top tier, the gap between top performing funds versus rest of the fund is very wide. That means, you know, if we can invest in all those top performing funds, our return, the investment return, could be very attractive, you know, as well. So after I learned that, I started spending more time on the fund investment, and you know, I just fell in love how dynamic and interesting the fund investment it is, and ended up starting my own fund as well.
Awesome. David, you want to add anything?
So my kind of, and Youngrok kind of prefaced all of this. This is what you call foreshadowing. But I found my way into the world of LP very similarly. Saw a lot of emerging managers kind of like outperform. And it was really exciting. And at On Deck Angels, we had a lot of operator angels who ended up becoming emerging managers. And a lot of them ended up coming into me. It's like, hey, you know, David, you've been really helpful. Would you be interested in investing? Kind of thing. And there were a couple folks who were like, okay, you know what? Blank check. I've seen them grow. I've seen them grow over like 2 years or so. If I had the opportunity to, I totally say yes. So I ended up writing my first check while I was on the Angels. And then and to help me understand, because I was very rookie by design, I ended up reaching out to a bunch of my GP and LP friends like, hey, can you help supplement my learning here as I'm doing so? So I ended up getting in touch with 80 LPs in 2 months and ended up writing a blog post called like the Non-Obvious Emerging LP Playbook that helped me personally understand how to be an LP, which effectively ended up helping a number of friends also write their first LP checks. So that's how I found my way to be an LP.
Let's put a link to that blog post in the chat. We'll find it and put it there for you, David. That sounds awesome. Okay, so you guys are helping me here because I have a list of questions and you're talking about emerging managers, and that was something I wanted to ask about. So let's dive right in. Of course, they're the established firms, many of whom are fantastic, right? But they're also very hard to get into as an LP. With that said, a lot of the new and emerging managers, as you have all been saying, are performing in some cases better than some of the biggest firms out there. What is your view on new managers, emerging managers, established managers, and where you want to focus your time and effort? Marko, because you did such a good intro, why don't you start there, and then we'll give everyone else a shot next.
Basically, I've been investing in all kinds of managers during these, my years as an LP, from first-time managers and venture, VCs to established managers, buyouts, private trade, private debt, infrastructure. And for a institutional portfolio, you obviously are going to have all of these sub-asset classes in your portfolio. You have to. One of the reasons I got excited about emerging managers or first-time managers was my background as a founder and a GP investing in pre-seed and seed for about 25 years ago. Around 2009 and 10, we started to think about emerging managers because we thought that it would be a good idea to try to figure it out whether we can make better investments by investing in first-time managers, which we did. We started that program for about 15 years ago with excellent results, and we have all the data from that. If you want to make good multiple, you have to go for a smaller fund size. And it really doesn't matter if they are first-time managers or first-time team, if they have a solid background. They could be, I personally like people who've been, professional or founders, operators. They don't have to have a stellar background as an angel, which sometimes would be, nice thing to have. But I do sincerely believe that if you really want to make good numbers, good multiples, you should have at least part of your allocation to the emerging managers or even first-time managers, even for the bigger institutions. But you have to make the decision. That's what you have to do.
Anyone else want to leap in on this one?
I can go next. So one trend I see these days is if you take a look at the data of what top tier large multi-stage funds are investing these days, according to PitchBook data, in the past 2 years, they investing more seed rounds these days. And it makes sense because the late stage market is less active, and they already raised the capital. They have to spend some money somewhere, and a lot of multi-stage funds are investing those small seed rounds. What that means is when it comes to competitive seed deals, it becomes even more competitive, and those top tier well-known VCs are going to take most of the rounds of the deal. Now, emerging majors just tend to be small, and their check size is small as well. So they can collaborate with a large fund, even if they take 80%, 90% of the round. Small funds, emerging majors, they're okay with 200K, 300K, meaning they can co-invest it with the big funds. So I think emerging major could be even more interesting. Emerging, when I say emerging major, it's not necessarily 100, 200, well, like $300 million emerging majors, right? What I'm talking about is $30 million, $40 million emerging major who are writing 200K, 300K, even 500K, who don't necessarily need to compete with the big funds. Because again, what I see now is those deals are more competitive, and now it's going to be really difficult for mid-sized funds without brands to compete for those competitive seed deals unless they are small enough, like emerging major, or big, well-known VCs who can win the deals.
Right. So let me just try and explain that for any laymen that are on the, like, a
Thank
big
you.
Sequoia can come into a deal, but another big Andreessen Horowitz probably can't because they're competing for that. But a bunch of small funds can go side by side with Sequoia, right? Because Sequoia's like, sure, your buddy over at so-and-so fund can invest alongside us. That's fine. But they're not going to let Andreessen Horowitz invest alongside them because they're competitive, right?
Yeah,
The
exactly.
mid-tier funds can't find their way in because they're not competitive and they're not
Right.
small enough. So actually, I've never heard that's super intelligent. Thank you. Anyone else want to add anything on the new emerging and established side?
I'll add a
Well,
little bit to and both Marko and Youngrok has said kind of amazing insights already. One of the big things with kind of emerging managers is we find that they're often lean in investors instead of lean back investors. And what that effectively means is that they have the ability to find and hustle for deals where a lot of larger firms may not have the capacity to, interest to, and so on. And why that's really important is that's where outperformance is, right? What I look for as an LP is, are managers fishing in differentiated pools and pools that haven't been fished in before? And there are a lot of established managers out there that tend to get the same deal flow. Like everyone goes to like YC demo day, everyone goes to the same kind of things. But a lot of these emerging managers are either local to their geography or know their subject matter area like really, really well, where they know the best people, the smartest people doing it. And they're able to find deals that the rest of the firms can't find. And that's what I find to be extraordinarily important and also really insightful. One of my favorite friends in the LP world once told me, as an LP, you're signing up for the most expensive newsletter subscription that you're ever signing up for. And so because of that, you kind of want a really good newsletter subscription if you're going to invest, like, I don't know, 6 figures into.
Paula, do you want to add anything?
Nothing to add. No, David, Youngrok, and Marko have summarized things very well. Nothing new to add.
That was, yeah, I know, guys, that was bravo. All right,
one thing I would like to say that you need to find GPs that do care. If you have a 5 to 10 million fund and you're writing a check of 250 to 500K, you have to care because that means a lot to you, to that kind of manager. If you're managing a fund which is 500 million or even more, 1 billion or so on, the 250K check doesn't mean a thing to you.
Good point.
I mean,
in fact, so both you and David segmented a little bit into another question that I have for you. So I was going to ask, like, what are some of the things that you look for in new and emerging managers? Since it seems that everyone here, based on the intro and the latest question, are interested in that and perfect for the audience, right? So what are some of the criteria that you say, hey, this emerging or new manager is amazing, this one maybe not so much? Paula, do you want to start so we can?
Sure. There are, I think, 2 or 3 main things that I look for. The first is obviously track record, and there's the financial metric that we all look for to make sure that a given emerging fund manager is proven, whether that's with their existing fund or previously at another fund or just angel investing track record. The second one would be really getting to know the management team. We've made reference to this earlier in our discussion here, but venture is a long-term game. I think LP investing is an even longer game, just the nature of fund life cycles. you're making a commitment to 10 plus years minimum. So really getting to know a fund manager for a period of several years before making that commitment is something that is absolutely critical. And the last thing is diversification. Does this fund manager, emerging or not, offer me something in my portfolio of funds that I don't already have? I would say that's critical in that analysis.
Awesome. Thank you. Who wants to go next with some of the things they look for? And it could just be unique things that you look for or little tidbits, because we want to advance the craft of also being an LP.
I can share two things. One is, first of all, I think one big difference between startup investment versus fund investment is that, in my opinion, fund managers are like 70% fund managers are really great. I mean, they start fund because they achieved something in the past in their career, right? As an operator, as a founder, as an investor. So if you, as an LP, if you look at them first, they look great. Like, oh, wow, like they achieved so-and-so, like, here and there. So that means they're going to look alike if you talk to like 10, 20, even 100 funds. So I think it's really important to, just to know that they're all good. So LP's job is to find the best ones who fit you the most among those great fund managers. So that's, I think, mindset that I always try to have and give advice to other LPs. Second piece, which is more practical, is there's a lot of these framework, including what Pola already mentioned, things like a track record. But one simple things we take a look is what we call is a functional expertise and subject matter expertise. So functional expertise means whether do manager have some functional experience as a marketer or as a go-to-market expert, right? So they can help the founders in their certain area, right? Other thing is similar to what Dave mentioned earlier, subject matter expertise to certain industries, right? Whether they have expertise in some B2B SaaS space, or whether they are experts in the defense tech, whether they are expert in the fintech space, right? So when managers have both sides of things, let's say, hey, I know this fintech market and I'm a marketer, I'm marketing experience in functional expertise. I think that makes great managers often, because again, they know people in the fintech space and they know how to help in a specific area that they have expert on it. So that's a second piece.
David, do you want to add anything?
Well, Paula and Youngrok already covered a lot of ground. I have, I guess, one thing that kind of lends itself to what Youngrok was saying, and then two things I kind of look for outside of what Paula and Youngrok have already mentioned. The kind of in relation to what Youngrok said in terms of subject matter expertise and functional expertise, I look for something called like a check size to helpfulness ratio, which is as a function of their check size, how helpful are they as an investor, right? Usually for emerging managers, I kind of look for 10x. So they're 10 times more helpful than check size. And if they're writing a 100K check, that could mean $1 million in helping with the sales pipeline, making a key hire, other investors, all these kind of things. And it kind of goes back to like what Marko was mentioning earlier, like, emerging managers are often like very helpful in nature, and they want to like lean in and all that. The other two things are probably more personal, but feel free to take everything with a grain of salt. One is portability of track record. There is a lot of folks who kind of come over and like, hey, as an angel, as a syndicate lead or whatnot, my TVPI is 6x, 10x, whatever it is, and it's great. But then they have and usually as an angel, you're pretty generalistic, opportunistic in nature. And it's important to know that once you kind of port over that track record to being a fund manager, you're really being evaluated on the investments in which you made that are on thesis for the fund in which you're trying to raise. So out of like, let's say 30 investments, which is 10x TVPI kind of thing, right? The investors are probably looking out of those 30 investments to 4 investments, 5 investments that are actually on thesis at the stage in which you're investing in and the industry in which you're investing in. So that's something I look for. So kind of a little bit more granular than just like overall track record. And the last thing is like, I look for is selfish versus selfless motivations. I think selfless motivations are what goes great on TechCrunch, Forbes, front page, press release, amazing. Like this is the world vision you have, the why you're doing this and why you're helping the world. To me, just because these journeys are so long, like one fund is 10, maybe even 15 years, 3 funds, you're 20, 25 years in, you have to be in for the long run. And the selfish motivation helps me a lot, per se, which is like, why are you gonna like keep going in the hardest moments? Because the selfish motivation of, I got to put dinner on the dinner table for my family, or I've got to prove my parents wrong, or whatever it is, helps you go a lot further. Doesn't make a sexy kind of like front page headline, but nevertheless helps kind of emerging managers spend the next like 2-3 decades on this.
Yeah, definitely thinking about the long haul is super important when it comes to LP investing, as Marco and you just pointed out. All right, everybody. So all the participants that are watching right now, get your questions into the Q&A and start upvoting questions that you like. We're going to be going to your questions in just a few minutes. I got a couple more questions for everyone here before I turn it over to audience questions. So got a lot of good questions. Maybe I'll start with this one, which is, are there any things that you wish you knew before you started as an LP? So, I think it was said a couple different times, it would be great to have mentorship, right? So here's your chance to give someone a little bit of mentorship. Man, I wish I knew this before I became an LP. Youngrok, you haven't gone first. Let's have you go first this time.
Sure. Maybe it's only me, but when I make a first investment in venture capital funds, I was kind of afraid. I thought like GP is not gonna like LP, and they're not open to a lot of things to LP. But so that makes me rush into the decision sooner than I was supposed to be. But looking back, now I try to take as much time as possible to get to know them and to get more comfortable with my decision, right? And generally, GP are really open to LPs about their thesis, their investment strategy. So I think it's okay to relax a little bit and take time to understand and get to know the managers more and find the best fit. Because again, if we all discussed, it's a long game, and it's really important to find the right fit. And it's good for both GP and LP.
Great advice. Who wants to go next?
It's a hard act to follow. But I'll kind of like add some thoughts. First of all, are we allowed to cuss on this?
Yeah.
Okay. I'm more protective these days because I've been jumped on a couple of podcasts like, oh, this is family friendly, and then you're not allowed to cuss. So I'm just like, I held back.
I normally am the one cursing, so don't worry about it.
Okay. That's great. That's great to have a partner in crime. So I think before I wrote my first LP check, I did a lot of homework. Like I talked to ADLPs, put out the blog post, kind of like that was all prefacing the manager in which I wanted to invest in already. But I wanted to think from a more institutional lens than just like an individual lens. But despite all that, I think the oh shit moment kind of thing of like, oh, I didn't know this, was relying too much on references. So there's an element of doing diligence and important to do your diligence. And I did a lot of diligence for investing in a manager for a relatively small check size as an LP. But there were some folks who were like, hey, you know what, you shouldn't invest in this because it's such a niche area, and like the total addressable market isn't not even in billions, it's like 100 millions or whatnot. It's not going to become big in the future. And I thought they were really, really smart. And for a long second, I actually, seriously considered like, hey, I love this person as a person, right? He's also a great angel investor. But there are people who are smarter than I am telling me that, oh, this is going to be a small market size and it's probably not worth doing it. It's a winner take all kind of thing, and they might not be the winner. And I was like, oh, maybe I should trust them because they're smarter than I am. But there's a lot of like trusting intuition as well. And eventually it took me much longer to get to that decision as well. I went back to the managers like, hey, I believe in you and you as a person. And yes, there are other people who can probably cannibalize this market, but I think you can out hustle them before they realize that this is a market that they should be betting into. And it's also a function of portfolio construction, right? Like they were a relatively small fund size. They had high ownership targets just because, you know, they're one of the few, if not the only one playing in that market. And so personally found it very exciting. And even if, you know, their conservative case, they would have done reasonably well. Still too early to tell, but really excited for them.
Okay, so so trust your gut. Don't necessarily listen to all the naysayers. Anyone else want to come with some advice that they wish they had going in?
Mine was the same that David just mentioned. Just, you know, you can rely on the reputation of existing LPs or existing, you know, investors to provide sign off on any underlying areas of diligence that you may be concerned about. But it's always, I think the motto is trust but verify. That's the biggest learning for me.
So really funny things from what David and Pola said is about the reference check. We do a lot of reference check as well as one of the last steps. And it's really interesting to see no founders say really bad things about the managers. I mean, it makes sense. I mean, no one wants to talk about bad things about the investors, right? So it's really our job to understand and think about how to interpret their answers, right? Like how many seconds does it take for the founders to answer this question? Is it good or is it good? Does it take 1 second or 0.5 seconds versus 5 seconds, right? So there's a very small nuance, and when it comes to reference. So I think mastering those skills is also, I think, important to build confidence on our decisions.
There is one piece of advice that I still can remember. I got that around 1999 or so. It was a little bit older guy who's been in venture capital for a couple of years. And he said one thing to me, that you have to rely on your intuition. And if there is anything that bothers you in your due diligence, that you don't know even what it is, skip the deal.
Interesting. Right. So if you're like, something's wrong here, and like, just don't do it.
Yeah, because it's all about portfolio construction. And if there is something you don't really understand yourself, but there is something that bothers you and you don't know what it is, skip the deal.
Great advice. All right. So one last question for me. We've got, let's see, 11 open questions. Hopefully, Niels, you're going to filter them for us so that we get only the best ones. I want to make sure everyone here gets a shot to answer. So this is my last question for you guys, and we'll turn it over. But for anyone looking to enter into the limited partner sphere and start investing in the venture capital asset class, do you have any words of wisdom or pieces of advice to say, hey, you know, don't do it, or whatever your wisdom or pieces of advice would be? Marko, you haven't gone first in a while, so are you open? Do you have some?
I have to think about that, so I'll skip it.
Okay, does anyone want to go first on that one?
My main word of advice would be just diversify your portfolio and embrace a long-term perspective. Build relationships within the industry and just stay informed about any trends in the market and be prepared for a dynamic and sometimes unpredictable journey.
Well, let me double click on that for 1 second. Okay, so let's use AI right now, right? So all the generalist funds have started, obviously AI is a big trend, right? And all the generalist funds have been pouring money in, clearly, because people are raising multi-hundred-million-dollar rounds, not from space, but from and now there's some specialist AI funds coming out. So keeping an eye on trends, would you say, just to drill in on that, would you say like investing in an AI fund is a good thing because of the trends, or would you be hesitant because the trend is past? What's your view on that?
I don't know about my peers here on the call, but all the pitches that I've heard lately, everybody's an AI fund, whether or not they were previously. So, I would say the momentum around AI will persist. But the key going forward as LPs is to identify which sectors are most susceptible to AI disruption and identifying, which industry is really going to capture that most of that value.
Everybody's an AI fund is a great line, by the way.
It's true. I'd be curious to hear if others are seeing the same, but everybody's in AI.
I would say
Very
that
well.
AI is still at very early innings, to be honest with you. This is like the 1990s with internet. It just hasn't begun yet. And basically what we need to find are those applications or the segments of the market are going to gain some traction, which are not the hottest one. I could think about biotech, for example, or maybe legal AI, education, revenue, or code-related AI. But I think that we're still at very early innings. We are not too late, There could be these local bubbles and stuff like that, and people pouring money into these deals, but this is just the beginning.
Youngrok, you were about to say something as well?
Yeah. I just want to say, like 2 years ago, everyone's a Web3 funds, and now everyone's an AI funds. Yeah. So I think yes, we invested in some AI focused funds, not because he is doing AI now, but because he has been doing AI for a long time. So we're comfortable with funds like that, not the funds who say, hey, we're gonna do AI from today, right? But at the same time, I think we also, first of all, we invested in, we prefer pre-seed and seed stage funds. That means the type of the companies that they invested in is going to become a thing in the next 5 to 7 years, which is a long time, right? So the question we should ask is AI the things in the next 5, 7 years? Maybe, maybe not, probably yes. But when I was in previous firm, we invested in Chrostek Ventures, well-known big VC firm, and we all know they are the first investors to OpenAI. And I still remember when they sent a note to all the LPs saying, hey, we're going to put this amount of the capital into these things called OpenAI, including myself. I was freaked out, like, AI? It was back in 2018, because everyone thought AI is dead back then. And they are saying what they're putting that amount of money into the AI companies, and we thought that's not, we didn't understand. But now, look at now, right? So we hoping to find a manager who can find things which become really influential and change the world in the next 5 to 7 years, which may be AI, which maybe not. Yeah.
So do you want to continue, or David, with any advice to sorry, I tangented because you brought up the trends, Pola, but does anyone want to add to any other insights on the question of, tips for people entering the asset class? Obviously, that was a great tip with your end there, Youngrok, which is like, think, where things are going in 5 years in the future, rather where they are right now. It's a great one, depending also on the stage you invest. Anyone else want to add any? Or do you want to add something else, Youngrok or David?
I'm gonna be honest, I don't have much to add to this discussion over here. I think between Paula, Marko, and Youngrok, like, they've covered a lot of ground here. I don't think I can add anything else.
Let's go on then to the questions from the community. So remember, everyone, upvote, get your questions in. So Katie's asking, let me just make it a little larger here. This is a good question. As an LP, how much do you prioritize financial returns versus impact or social good? Are you willing to do VC that prioritizes social impact, and even if it has less returns? Who wants to take that one?
I can kick us off here. At Kensington, we prioritize financial returns. Looking at impact and ESG is an important consideration and something that we always take into account in our due diligence process. at the end of the day, we also have investors that invest in us. So we want to maximize return for them. So we absolutely prioritize returns, but take ESG and impact into consideration in making our decisions.
Yeah, I think it's difficult to have, I mean, candidly, if you're social first and return second, I think a lot of LPs are not going to be interested in the fund. It doesn't mean you can't do both, though, right? I mean, that's essentially what you're saying, Paula, right? You can have financial returns and impact. All right, let's get to the next one. From Luke, what are the best ways to find LPs investing in emerging managers, conferences, organizations? In particular, he's in crypto Web3 or crypto web. Let's separate those questions, right? Because I think if we let's start with what's the best way to find LPs for emerging managers. Yeah, so love to hear anyone's views on that, and then we'll talk about crypto Web3 as a second point.
I can start here. So first off, talk to your investment advisor. It's not financial advice. It's for educational, entertainment, informational purposes only. At least my lawyer will kill me if I don't say that.
You're referring to general solicitation, correct?
Well, no, not general. Well, not general solicitation. Just in terms of advice shared on this conversation altogether, right?
Fair
or like
enough.
at least, yeah. So the truth is, if you're an emerging manager, like, you're probably like a sub $50 million fund, and in a lot of cases, like, $10 million fund, and based on how accreditation laws go, you can have 249 accredited investors for like a 10 mil, south of 10 mil fund. What that effectively means is you're just looking for people who have capital and who believe in you. Like in the beginning of fund one, you're selling a promise. Fund two, you're selling a strategy. Fund three, you're selling the returns on fund one. And in that world, everyone who owns a house in the Bay Area is an accredited investor. And effectively, I mean, Youngrok and I, at least I know we're in the Bay Area, so this is like probably more near and dear to our heart. So pitch to everyone and anyone, right? Your dentist, dentists make a lot of money, right? So like pitch to your dentist, pitch to your lawyer. Your lawyer probably sees tons of deals and probably can, fine tune, like, hey, I've seen this before, I haven't seen that before. They're not nearly as critical. And if they believe in you, if you're a long-term client, they're probably going to invest a little bit as well. Pitch to literally everyone. And so, I mean, for the most part, you can't really find LPs on the internet. The reason for that is a lot of LPs don't care about deal flow. They're investing like 1 to 2 new funds per year kind of thing. And so they don't need like hundreds of people, thousands of people. There's like 4,000 seed stage firms at this point in the world, right? And so it's like they don't need all this deal flow. And so because there's no point in putting LP on their LinkedIn. I will say, like, if you're looking for larger LPs out there, there are a couple content creators out there that are starting to focus on the LP space. Whether it's Samir Kaji at Venture Unlocked to, I like what you guys are doing at VC Lab, to kind of like Ted Seides at Capital Allocators, LP Podcast with David Weisberg. I started a podcast recently also covering the LP world. So like you can discover it starting with some of this content, but the realistic nature of it is these are larger LPs who just, for the most part, are writing minimum, like, I don't know, 10, 20, maybe even $50 million checks. And so they're not going to invest in a fund one, but it's important to build that relationship now.
Right, because as you heard from multiple people here, they want to have a relationship over potentially months or years before making an investment. Does anyone else want to answer how to find LPs, or should we jump on to the Web3 side?
I think one thing I learned from our own fundraising exercise was how serendipity, works, right? When I take a look at our LPs, I mean, some of the LPs are like someone I couldn't even imagine that become LP, right? So I think one of the best advices could be just ask for an intro, to LP, and you really don't know what kind of intro you're gonna get, right? So have a just casual conversation, and try to be helpful to them. And if they're not good fit, move on. If they're a good fit, good for you, right?
Kiss a lot of frogs, so to speak.
Yeah.
Anyone else, or should we jump on to the Web3 side?
Actually, to jump on something else, I think you mentioned in the question that it's like, oh, should someone go to like conferences? Like, for example, like JPM Healthcare is, at least at that time this recording is going on right now, right? This might be slightly contrarian, but I think conferences are a waste of time. And the reason I say, let me like preface it. If you're gonna join as a participant, it's like, and you're trying to get in front of LPs and trying to like be a thought leader, like no one's going to hear you. You're going to be drowned out in the noise that exists out there, like especially on the floor in the lobby. It's just like way too noisy in general. So if you are going to go to conferences, you better host your own event. Like you better have something that you're doing that has your name stamped on it, because otherwise you're going to be just another person, another business card they throw in the trash as soon as they get back home. Versus if you want to live in their mind a little more rent-free, you've got to do something that stands out in their mind, and it's not just showing up at a conference.
That's great advice. All right, let's jump to the crypto Web3 side. You know, if you know, what are your guys' views on crypto and Web3 right now? Who wants to take that one? No one.
I'm gonna pass on this first by saying that I don't understand crypto Web3 nearly as well as some other folks probably on this conversation. So I haven't allocated to a single Web3 crypto fund.
Well, let's start there. Have any of you allocated to crypto and Web3?
No.
Yes.
Okay, well then maybe what's your views on it, Youngrok? So that
Sure.
we got 1, 2, 3 no's, so there's one yes.
So we allocated a couple percentage of our fund into crypto, and we plan to commit 1 or 2 more crypto funds. It's not going to be majority of our fund allocation, obviously, but our thought is, again, if we try to look at in the next 5-10 years, what kind of technology could have meaningful impact and eventually bring attractive return to our fund, right? And cryptocurrency could be one of them, in our opinion. In fact, you know, if you take a look at all these data, for example, there's a fund called Electric Capital. We are not an LP, but I have a huge respect to the team who runs the fund. They issue a report about how many developers are flowing into the crypto space, and the amount of the developer is key to the crypto space, right? And there is a uncorrelationship between number of developers and the Bitcoin price. So what I mean by that is when Bitcoin prices go up, number of developers come in, right? Increases. But when the Bitcoin goes down and becomes the crypto winter, even if that happens, the amount of the developers stay the same. And that happened already twice. So once developers come into the space, they really like it. Now, because of the AI things, they're competing for developer resources between AI and crypto. But still, there's a good amount of the developers who are building something in the crypto space, right? So that's why that's one of the reasons why we are still trying to look at some capital into crypto space, because because it could be something very big in the future.
On the Bitcoin prices, you know.
Oh yeah, now I think of the ETF things, right? Who knows what's going to happen?
Here's Alexander's asking an interesting question here. What are some of your non-financial motivations to make an investment decisions? For example, wanting to be part of a network of LPs, or you guys, or getting some sort of crystal ball, or I think you mentioned the most expensive newsletter you ever purchased. So what are some of your non-financial motivations? Maybe Pola or Marko, you want to go first on that?
Marko, you go ahead.
I would say that the returns, they come first, because we do have our LPs as well as a fund of funds managers. But I would say that for my part, it's also that I want to understand some, specific sectors maybe a little bit better and get that kind of information. At this stage, I'm very interested in for example, understand AI and biotech, and it means that I'm going to probably conduct a due diligence on those kind of funds, even if we don't invest. But I kind of want to learn more. It's a learning process, you know. You want to get better at what you're doing, but you don't have to invest in a fund, but you have to conduct the due diligence. And if the due diligence gives you the you know that you are confident that they're good managers and you can make money, you're learning something new, and then you make the investment. But we, at the end of the day, we always have to keep in mind that we have our responsibilities to our LPs as well, because they kind of expect that we're trying to you know, make nice returns to them, and keep the risk level as low as possible, you know, if it's possible in venture capital.
Paula, quickly.
Echo exactly what Marko said. One point that I would maybe add is if there's a given sector or industry that we want to learn more about or get more exposure on, that would be maybe a secondary factor to consider. Like, let's say we want to learn more about cybersecurity or defense. Allocating some capital to a given fund that we would be able to get that learning from is also something we take into consideration.
Final question here, because I know we got to end on time, so we got a minute. So quick answer here. You know, a lot of people are asking, like, what is your view on VC in 2024, 25? A lot of people are saying it's a great time to be a GP. Do you guys feel that way? Do you also feel it's a great time to be an LP? So let's just get the super quick answer from everyone here. Maybe we'll do David, Youngrok, Paula, and Marko in that order. David, you want to go first?
So I, for one, am actively investing, both as an angel investor and as an LP. And there's the rule of, like, if you know one LP, you only know one LP. I know equally as many LPs who are holding it, trying to figure out their strategy. I know a lot of LPs who are deciding what their allocation strategy looks like for Q1 in Q1. So this kind of month they're thinking about it, but they're probably not going to deploy till like second half of this year. So I am, but can't speak for everyone.
Youngrok?
I am. We plan to deploy the capital more actively than last year. Last year was our time to pause and see what's going to happen. And this year, I think we are more comfortable about the market, and we plan to, you know, allocate more capital into venture capital funds.
So 2 bullish. Paula?
3 bullish, also actively investing and optimistic that the difficult transition period that we saw in 2022, 2023 may be largely behind us. So optimistic for the coming year.
Last but not least, Marko?
Keep on investing, period.
And you're bullish?
Absolutely.
What a great time. What a great panel. This was amazing. I've been seeing the chat. If you've been seeing it too, people are so excited. We really did a great job, everyone. This is one of my favorite panels. I took tons of notes. Thank you all. I know we need the line for another event. It's all back to back every day here. Thank you. I hope we can do this again. This was amazing. Thank you, guys. Bye, everyone.
Thank you so much.
Thanks for having us.